I found a strategy on YouTube that actually looked promising, but testing it in real time was a total roller coaster for me. In February, it felt like I finally found the Holy Grail, but by March, I was questioning every single entry. I ended the test at 17% profit and a 36% win rate. On paper, that's a respectable result, but these numbers hit a brutal truth. March almost wiped out my confidence completely. Today, I'm breaking down the raw trade logs to show you why the logic worked, where the trap was in March, and the one lesson that changed how I looked at this backtesting exercise forever. Let's jump into the chart. All right, guys, here we are on the chart. But first, I want to go over the strategy as day trading Ralph presents it. So this is a screenshot from his video where he talks about his time-based range strategy that we're going to backtest today across February of 2026 up till April 1st. So all of February, all of March is what we'll backtest the strategy on MYM, so futures, for the purposes of today's backtest. And basically what he's saying here is that you look at the 812 to 912 range and you mark out the high and low and wait for price to go to either side and collect the liquidity that's presumably at these levels, and then give some type of signal, whether it's inverted fair value gap or engulfing candle, to suggest, in this case, higher prices. It'd be the reverse for shorts. And this is independent of market structure, apparently. He doesn't say anything about that. He also doesn't clarify on what time frame this is supposed to be. So I'm just going to use the 5-minute, since I would have an easier time identifying engulfing candles and things like this. We'll see what I mean when I go into the charts, but that's basically it. He says, once you get that signal that price has collected liquidity and is moving towards the other end of the range, you can place your entry at a logical place, like the spot where the inverted fair value gap was created, or a fair value gap on the opposite side, what have you, and then place your stops under the low, and then you'll target the opposite end of the range. This is how he explained it from the video I watched. So again, I'm going to assume the 5-minute chart since he doesn't clarify that. But here we are. What I've done is started backtest. We can see here that we're on February 2nd, 2026, which was a Monday. I've marked out from 8:15 to 9:15. So since I'm on the 5-minute, I don't want to keep toggling between timeframes for the purposes of the backtest. I'm just going to round it over to 8:15 to 9:15. This is the presumed range between those two times, and we're going to start a backtest. We'll advance forward and see what price gives us. This is the part I was curious about. The fact that his range is at 9:15, 9:30 is the open. So there you have the big opening candle that breaks up. We're looking for a movement back into the range, presumably. There's some signal here like this that we're going to show a downward movement. We didn't get the engulfing candle there. I guess he specifies that we should wait. Let's go back to the screenshot. I guess we have to come back into the range. If the move happened outside of the range, then it doesn't count. So this was far away from us now. I would stop trading around 12 noon, which is right there. So I guess that's the first day gone. We go to the next day. Let's move our ranges up. 8:15, and it's right here. That's the upper bound of that range. And then we have 9:15 right there. Actually, 9:15 ends right here. Okay. We have 9:30 open, which blows right through it. So again, I'm not quite sure what he's talking about here. Good. We go come back into the range. But we haven't closed inside of it, I would say. Is that a close? Okay, well, here we go. So let's rewind back actually. This is a candle close inside the range on the 5-minute. So we'd be looking for shorts. Place my stop at this order block here and put my stops right at the top of this. The opposite end of the thing is only a 1.2. So I'm going to zoom out and see if I can find something logical that makes sense. Like this 15-minute fair value gap right here. So maybe I'll target that. And just put, for the purpose of, I'm starting out with a $2,500 Apex trading account. So I'm just going to risk $100 on that as my max. In this case, that affords me $76. and we're tagged in. See what happens. If it does get to the opposite end of the range, I'll go to break even, which we do. Okay. So I'm at break even now. And for the purpose of backtest, I'm not going to take partials. I'll just play it out till the logical area, and that one covers. Okay, so we got our first win here, which is great. Let's adjust this so that it's a little easier for me to track. And we're going to go on to the next day. Okay, so 8:15 is right here. Actually, let me just do something real quick. Let me adjust these session indicators to be exactly what I need. Okay, so I've adjusted my session indicators to be a little bit more helpful in terms of finding the highs and lows so that we can speed up our exercise a little bit. So let's jump back in. We have one win. We locked up our 9:15 to 9:15 high. We're waiting for price to hold and come back in with aggression, which is what we see here. And so since we're back in the zone, this qualifies as an entry for me because we poked out here and then came back aggressively. So I'm going to just kind of find this order block here, place my stops at the low, and then again, go to the 15 minute to see if I can find an area of interest. I guess this would be the last day's high right here. So I'm going to target that. It's a little bit too far for me. So I'm just going to go for 5R. Okay. Risking $100 again, maximum. And what happened here? Okay, so we're tagged in, then tagged out. To be honest, I probably wouldn't have put the trade on if prices went back to, it retraced and then came back. But for the purpose of the exercise, I'm going to keep it. Well, I probably wouldn't have done that in the real markets, but keep it clean as best as we can. Okay, here we go with this. All right, so this is 9:15. So you just adjust real quick. Yeah, okay. Back with the fine on it, we're looking for back in, we're looking for some conviction from buyers, like an engulfing candle or something. I'm not getting that, or except the right when I get actually go too soon. We do invert this candle here. It's a fair value gap on the sell side that we invert, like you can see right there. So we close above it. Let's zoom in here. We close above it. You can see. So we've inverted this fair value gap. That's what that means. So that qualifies according to his rule. So what we'll do is we'll place at the bottom of that fair value gap. I'll put it and I'll leave my stops here, and we'll target the opposite range high here. Put on 100. Flirty with stop loss. We can get a little bit more space. I'll probably take half the risk off at this point. If we can touch this value to this range, then I will go to break even. Note that as a touch. So we're at break even now. Break even. I easily could have taken partials, but according to the rules, we're happy to do that today. But break even is not terrible, I guess. Our high, have our low. I don't know why this keeps messing up on me. Just fix this session stuff. I'm tripped up on something, but in any case, we're going to try and keep it as close to 8:15 and 9:15 as possible here. Anyways, so we push up, we're looking for some movement back into the range, which don't think we're going to get. Or 12. Yes, we don't. So we'll move on to the next day. And here, we peak out. We definitely move out on some back air. Okay, there's our candle close inside. So I will place my long. Don't really have a fair value gap here against this form. There's this less sell to buy candle that I'll target. Got to find a logical area to place my take profit, which take here, I guess. That's the working high. That's the previous day high, it looked like. So I'll place my entry there. And it's going to go without us. At this point, I wouldn't keep this order on. So price left without us on that one. But I did move in the direction, which is encouraging to see. 5 minute. Okay. We start out above. We peak counter, we're going to try and find some movement back in. And get that here. For the next. The lows. Out to a 5 minute. Okay, so we peak in, we peak out, and then we're back in. But I don't see any fair value gaps or inverted fair value gaps, what have you. There's a peak out. We'll come back in. Feed for aggressive buyer presence here. We're not going to get it. We're past 12 anyways. We stop inside the range. Peek out and come right back in, which is favorable. We haven't inverted any fair value. So there we finally invert a little fair value gap right there. So I'm going to take that as an acceptance. There's an entry on the 15 and a lot of wicks outside. So another confluence I'll take. So cartels this candle, I just cover my stops here, cover my highs rather. Then I'll gradient this previous day low all the way down there. Okay. There's the 100. We're tagged in. Then you immediately go to the other side. So I'm going to go to break even here. And thanks for a take profit. Immediately, and there was room to go. So that one makes sense. So go to the next one, next day here. All right. So February 13th, we're on now. We point out our highs and lows. We peak out and come back in. We did invert this fair value gap. There was a little fair value gap right here that we had, and we just inverted it. So that counts for me as an entry signal for long. I'll just target this last buy and sell candle. Cover the wick is pretty aggressive in terms of the liquidation signal. So I'm not going to cover it that. If it's going to go past that wick, then it's probably going to go further. And there are a lot of fair value gaps up here to serve as a draw in liquidity. So I'm going to take advantage of those. If you just get to a nice 3R, run the trade. So that was a 930 candle too. I probably wouldn't have done that in real life, but okay, we immediately go up and I'd be at break even at this point. And we're approaching and we do it. Get take profit again. So far, so good with this account here. With this strategy so far, let's see how we all shape out. We could finish the experiment. 15 candles right there's peaked out to see conviction to go back into the range. We have some fair value gaps here, so I'm going to take that as a signal. If I put my stops here, this is just an 81 tick stop, so I'll take that. Drop to the 15 minute, see if I can find a draw on liquidity that makes sense. Bunch of fair value gaps here. So I'll just target 3R. It's the trade off. Okay, we get tagged in and stopped out. That one was a quick one. Go on to the next day. We poke out. And come back in aggressively, might add. So that to me is an upper signal. We have an engulfing bearish candle here. So we're marking out the candle stabilizers, the top. This again looks like a manipulation wick. So I'm just going to place my stop just above those highs. And let's go to the 15 minute to find a logical place. There's a wick down here. So maybe it's targeting that an area to capture that would be a previous day low. Okay. Put on one contract. Since it's, even if it reverses, since it's gone with the other range, I'd probably take this trade off at this point. which is probably the right move since it's probably going to stop me out. Yep, it would have, but closed the trade early there. Okay, look at our highs and lows here. Again, we're just doing 8:15 to 9:15, which makes me nervous because the morning open is pretty aggressive. So this was interesting. Peak out as part of the 9:30 open, but then come right back with our next 5-minute candle being an engulfing candle. So technically that is a signal here. I'm going to mark out probably just out inside of the sell to buy candle. I'm going to put my entry at the top of the candle, and then I'm not going to put my stops all the way on this. I'm just going to prioritize the level that we marked up, use that as a cue. Go to the 15-minute, find entry. We still have a lot of fair value gaps up here that haven't been mitigated, so I'm going to target those in my 30-hour setup. Jump back to 5, see how this does. Okay, we're tagged in. Pretty much at 1R. Okay, at this point, I moved my stops to break even because price action is telling me that I have to revisit this area and this order block perhaps to gather some liquidity. And now that we've pushed beyond the original high, I feel that we've closed now above it, so that's even better. Chances are we're going to hit take profit here, but let's see what price does. Continues to peter around here. I have to close my trades for future accounts at 4 p.m. 1600, so that'll be our marker. And we go back to break even. Fortunately, we don't make anything there. Mark out our highs and lows. Okay, we're going to get the aggressive move down. And let's see, that's a pretty aggressive engulfing candle, if you ask me. So that will qualify. I'll place my entry and stop loss around the sell to buy candle. And I will target previous day high over here for a 2.69 trade. I'm fine with a little less 3R because it just makes sense. Draw on liquidity. We get tagged in. We can close above just like that. We'll go to break even. We'll almost go get touched out at break even. What it looks like coming for us. There it goes, break even. What it's telling me is that I'm able to get to 50% of I'm able to cover 50% of my area before I take profit. So I could take partials. It's an adjustment I can, of course, make later, but it's good to see that partials are on the table. There's something a little bit different in terms of how we're setting this up, but no matter, it should still prove itself profitable whether I take partials or not, frankly. Okay, so we peaked out. We're looking for a bullish engulfing candle just like that. Place our entry and stops around the last sell to buy. And I'll target this would be the working high of the day, like Asia high, let's say. Okay, place our entry on, we get tagged again. Immediately at 1R, if I touch the other end of the range, then I'll go to break even, but doesn't matter, I shoot up. And it's a win for a 3.2R win. Okay. So go to the next day. What I'm noticing is that this 930 candle is initiating an aggressive move. And if we can find ourselves back into the range, it really proves that initial activity was really a capture of liquidity that needed to be cleaned before a real market move. Now, this one's interesting because it went pretty much coast to coast in terms of its movement. It's the fact that it closes out on the other side of the range. I'm very hesitant to take anything. Looks like price is going to get away from us today, and that's fine. Fine to move past this day. Went very far down. Just right here. Okay. See what that 940 candle does first. It touches on both sides, but ultimately don't stop. I need it to come back or down. Do something just like that. It engulfs this last candle. Just zoom in. It engulfs this candle right here and gives a fair value gap on the next one. So to me, then it is pretty convincing. And what I'll do is I'll target the opposite side of where it keep a wick here for 2.9 trade. Attack there. Sit a drawdown for a long time here, but eventually do get into positive territory. Now, that tells me something because there's some real defense happening at this level, which is where the wick was. This could have been the last area where liquidity was grabbed before a longer move down. Since we're in profit, I move my stops to halfway just to protect some of my downside here. See what happens. And probably get stopped out there. And that does save us, I think, from a full loss. Yep. It would have been fully stopped out. So that was smart to reduce our exposure. So our stops out of range here. See what the 930 candle does. Okay, we peek out, looking for conviction on the buyer side. Just like that, I would take that as a conviction here. If we could leave a fair value gap, that'd be even better. And we do, so I target this fair value gap. Stops just under the low, and I'll target the other side of the range. Get that in. Since we're inside the range here, I'll hold the break even. Let's see if we can hit the other side of the range here. We do. So we hit the other side of the range here for a win. That's a 2.9 winner. Keep it going here. I will pause at February just to see where we are with the data out of curiosity. So stick around for that. 15. Okay. So we're shooting up. Big manipulation wick right here, followed by aggressive down, which engulfs not only this candle, but the next one. So I'm going to take this short. I'm going to identify this buy and sell candle as my area of interest. And look at all the fair value gaps here. Everything kind of builds and builds here. We get a lot of consolidation, and then the big shoot up here on the 15-minute chart. My thesis is that price will come back to clear all that inefficiency while covering this range in the meantime. So let's see what happens. Ooh, that was painful. So we didn't get tagged in. We just missed it. This buy to sell candle was what I was prioritizing. We just missed it by a few ticks. You can see it right there before. But yeah, we would have hit take profit. And those trades are funny because even though I didn't get tagged in, I'm actually kind of happy because the thesis was correct, right? It actually worked out really well. We just didn't get tagged in. That is fine. We'll go on to the next one. Sometimes you get them, sometimes you don't. And it went down heavy after that, looks like. So Grail would have been able to make a nice profit if you were to catch her. But that's okay. Keep going here. The highs and lows. 930 candle shoots up, peeks out underneath. See if we can get some buyer conviction. That is an engulfing candle. That is the better one. And we get the fair value gap. So at this point, I would target halfway through the fair value. I'm going to take my lesson from that last trade. Maybe I was a little bit too conservative with where I put my entry. This top here would make 3R. Let's see if there's another logical place to go. You can see another consolidation before a move down. This could be some type of point of control, let's say. So I'm going to extend it just a little bit. Don't want to get too greedy on this. But I'll take this. We get tagged in. And since we're back in the range, I'm going to go back and we'll go to break even. Let's see. Yeah. Get break even. It's okay. I think that's the last day of the month. Yeah. So next is March 2nd. What we'll do is we'll pause here to see how we're doing with our data. All right. Here we are on the dashboard for February. Really positive. We already have a 40% increase on our P&L. That's only after 12 trades, 66% win rate. Really good. And that's only trading $100 per trade. So that's really positive. That is only 1 month and only 12 trades. So that's why we're going to do 2 months here. We're going to go back in and start March. And then we'll come back and revisit and give our verdict on if this trading strategy is worth continuing to backtest against, potentially an option to integrate into our trading journey. finish up this backtest exercise here for everybody. Yeah, got our highs and lows. We peak out, break out. Let's see if we can get the sellers are in control here. Nothing quite yet. We don't invert that fair value gap there. We're still getting a lot of buyer activity. Fair value gap to invert. Potentially we do. So that would count as a sign that we might be ready to go back into a range to understand the strategy. So our take profit would be all the way down here. I'm just going to do 5R here, not to get too greedy. Stops at these local highs. See what we get for March. We got a stop loss. Okay, it's fine. Put next day. Curious, price did eventually come back down, but this is not when we needed it to. Yeah, that's 915. Okay, we break down. Don't really involve that candle. We do there. Now, does it leave a fair value? It doesn't. So we don't want to jump in too early. We engulf another candle. Again, there's another engulfing candle. So I'm going to take this as a sign. Even though I'm not getting the fair value gap I would like to see, I'm seeing plenty of engulfing candles in short periods of time. We're going to target the upper bound and place for stop. Yeah, it went, but we just missed our entry. It was probably here. It never came back after that. We could have gotten in at this point, but I was waiting for a fair value gap. But when I saw the second engulfing candle, that was my signal. Just didn't get tagged in this time. And marked out our highs and lows. 930 candle shakes everybody out, goes down initially. And we invert that fair value gap right there. It took 3 candles to do it, but we do invert that fair value gap. Then targets the sell the buy candle. It's not just under the low. I'm going to get this wick up here for a 2.75 trade. This one goes without us too. So twice we were correct in our buys. We just didn't get tagged in. But we'll keep going. High to lows. 20 we peak out. 930 brings us back into the range. That is an engulfing candle, I will say. Just see how the next candle plays. So the next candle does also go bullish. So I'm going to take this sell to buy candle as my entry and target this high up here. There's a better high here. So I'm going to target that for a 3.49 trade. One contract probably get tagged in and tagged down. So March, so far, not working for us. Well, we're going to keep going, finish this month out. Yeah. Maybe we peak out, come back. I want to see a engulfing bullish candle just like that with the fair value gap. So I'll take this. In fact, that candle that created the fair value gap is bearish, gives me pause there. What's following rules there? We just missed the entry on that. And I would have taken the trade at this point. That's too far gone for me. Again, that's 3 trades we just missed out on profit. Just curious. Kind of just peter around here, but I'm not going to stick around for the whole show. Indicators is still way. Claims daylight savings time. So we're going to adjust. It's detailed here. I think we're bringing, yeah, 8:15, 9:15. So yeah. Okay, it's a range. Peak out. Don't take anything there. That's why I didn't do it and wait. In fact, this might have been the proper entry for sure. Because we peak out and come right back in and engulf the candle. So in retrospect, that was probably the play. In any case, it doesn't look like it would have gotten tagged in. Just set it after 3R. I'll put it on just in case we get a re-entry. Yeah, it's fine. Right, and it's stopped out here. Yes. Push out, tease out, see if we can get aggressive action back in. We do. Back into the zone. I see a fair value gap here. I can jump in on 42. I'm going to do the top of the candle here. Yeah, there's a lot of fair value gaps here that are balanced. So I'm just going to do a 3R trade. Just do a 4R trade. There's a lot of draws on liquidity here. And the price shoots out that goes right through us. So large is taking back a lot of the profit we earned for ourselves in February. You peek out, come back, get into a fair value gap. I would have really liked to see that, which is good. We didn't go paid prematurely. Price comes back down on us. There's an engulfing candle. There's another one. And we get a fair value gap. I like this a lot better in terms of conviction. Buyers. So I'm going to place our stops there and target the high here. There, another target we can look at. Yeah, it's a nice high right here. There's also a fair value gap. I'm going to do this. A little under 3R. Get tagged in and tag Grail. So large is not going in our way, which can be frustrating in real time, right? Right, coming out for that February where you made what 40%, and I pretty much giving it all back. Let's see what happens. Okay, we peak down here. Buyers come in aggressive. There's a big candle here. If I get a fair value gap, that could be something. We haven't entered the range yet, but this volume tells me something. The fair value gap tells me something too. Where it stops under there, target these highs. Liquidity stacked there, equal highs. Get tagged in and tagged out. Peek out. Let's see if we can come back in. That's a nice one. We invert this fair value gap right here. So I'm going to take this short and then we're hitting above that fair value here. And we're target the other side of the range. That one hurts because we just missed our entry. Did not get entered into that trade. And so we'll have to lost money even though we were completely accurate in our thesis of what happened. Thing you could do there. Right. For some reason, 930 had already played out. We peek outside of it. Come right back. It's very strange. Price action here. Know what happened with that candle. In any case, we break above. Can we break it down further? It's a pretty aggressive candle down there. We do inverse that fair value finally. So I'm going to take this. I see this as a range where now we have a breakout. So I'm going to take my stops. My fair value gap. I did a tiny little fair value gap right there on the target for entry. I did a bunch of fair value gaps here, so I'm going to do a simple 3R. I'm looking for big swings here. Adjustments are entry. Do get tagged in here now. All right, so finally something working on our favor. We're back in the range, so I'm going to go back to break even, so we're not going to lose anything on this trade. Hopefully we can make some dollars. Bad range here. Extend this to 4 p.m. Eastern. Put us on the 15-minute to go faster. Looks like we get break even. So unfortunately, that's not going to be the trade we need here. Let me break out. Extend out. We break, can we invert that fair value? If we do, and leave a fair value up the other way. So that's a nice setup for us. I'll get the other end of the range. Oh my God, we don't get tagged in at the end. That's real tough. So at this point, I would have closed the trade. And I don't want to get in too late. The trade. We don't get tagged in. I'm gonna go to the next day. Okay. Okay, we peek out. See if buyers could come back. There's some aggression, just like that. We don't take any fair value gaps or anything. So I'm going to see if I can get another conviction from buyers. And what I mean by that, if I can take this high here, now tell me more about their strength. Sellers are coming in. If we had been in the trade, we'd probably be in drawdown right now and price stopped out. Yeah, definitely stopped out with that way. At this point, I'm going to go to the next Thesis. So already approaching 2 p.m. Here we wick out. Come back aggressively. Let's get a fair value gap. No, we don't get a fair value gap. It's a good thing we didn't because I would have been stop loss. So now there's a fair value gap. We do engulf this candle and we get a fair value gap out of it. Placing stops underneath, target just above the upper bound. Hit stop loss here. Sorry. You've pretty much almost given back all of our profits from February, which is not fun. So I don't know if February was a fluke or if March is a fluke. Good to see how March finishes. We're almost done here. Okay, there's your fair value here and inverted fair value gap. So place this stop today since I see that wick is manipulation. Try to get this low. Price goes around us again. It's like the fourth or fifth time that's happened. The price just melted, did not wait for us. Yeah. Then we peek out. Can close out, then here. Okay, we invert that fair value gap. And we were bearish fair value gap. So we're trying to get in on that. And trying to get the other side. You see relatively equal lows here. So just about 380, a little bit more than 3 on trade. Price goes out without us again. Gosh. I mean, even if we got into one or two of these, we'd be in good shape because of the 3R setup. But not getting into any real tough. Count, you get a fair value gap, we do. Target this collection of words here first. That's why you do our trade, so a little higher for the equal highs. Definitely something to be taken. Hopefully we can just tap in on a retrace. We don't, but those highs are going to get taken right there. So we were right again about where price was going. We just can't see we tagged in. Tagged in and we invert that fair value gap. That happened real quick. But I'm going to just this buy the sell candle here. An area that makes sense. Let's go down here. Get tagged in again. This is crazy. We're taking the trade off at this point because we're kind of chopping around. It's hard to tell where this is going to go. Okay. I wouldn't have break even, but I'm not going to play this game of what could have happened. I, of course, been doing this backtest completely blind. I had no idea what's going to happen here, as is evident with all these losses. But that's why we do the backtest, to see if these strategies that we find on YouTube are actually worth anything. Break out heavy. See if we can get a golden candle or a fair value gap on the way down, something. I mean, you get one. Okay, there's. Yeah, let's make this full rotation of this play. Here. Break out, keep the 930 open, see if we can see buyers come back in. See any fair value gaps, which is good. Seller step in. There's an engulfing candle. Fair value gap, buyer step back in. And it's 2 o'clock at this point. I'd be out of the market. Okay, jump out. Okay, that's an engulfing candle. Fair value gap there. That's an engulfing candle again. And I'm going to jump down this. That's 2 engulfing candles. And we almost invert this fair value gap here. So I'm going to target. Let's see. We got this high here. Should point to the 8. You get tagged in. You can close inside the range. I'll go to break even. just like that. My hope is that we can take this high here. This is teasing for a little bit. I think it'll go. You have plenty of time to do it. Hopefully they're going back to break even. Tops on us here. Looks like it's going to break even. Ugh. Not sure what confident day. Is that the last day of the month? No, we got one more day of March. Oh my God. So gotta finish this out. The candle breaks out as a comeback. Now we need something fiction to show us that it's coming back. We got a Doge candle. Let's see. All right, that I like. So we're trying at the bottom of this last candle. So look for 3 hours. A lot of fair value gaps here to cover. So if I can get it, a little bit about it. Get that in. I'm going to use my risk for sure. Since I've been waiting so much. See that we shoot up. So that is a partial loss. So that was pretty brutal. That's the end of March. Some technical difficulties last night. So recording the results from this morning here, we can see that the tough March brought down our profits. At the end of the day, after 2 months, we're still up 17%. You can see that in March, we took 10 trades for a minus 23, which isn't great, but in aggregate, we're still in the positive. Our trade percent went down significantly given the poor showing in March. For me, the final verdict is to continue testing this strategy and maybe refining it or being more selective after collecting more data and observing more detail. Something the trader doesn't explain, but I found is that I think the reason he stops at 9:15 a.m. for his ending range time is so that he can observe the market move at 9:30, which will likely push him outside of the time-bound range he has created for himself from earlier in the morning. This almost guarantees a setup, so the price is likely to come back, and he's looking to catch that exercise. So if it makes sense, we saw that in February, obviously. Frankly, we saw it in March, but we missed out on so many trades. We just weren't tagged in. Either price went without us or it retraced, but just missed our entry. So even if 1 or 2 of those got tagged in, this would be under a minus 20 or maybe minus 15. So a lot more manageable. That's a little bit of the luck of the markets. I'm encouraged to try this out for future months, but let me know what you guys think in the comments. If you'd like me to continue testing this into future months with my commentary, then let me know and I'll be sure to do that. I'm not a guru. I'm just someone trying to figure this thing out just like you guys and work towards consistent profitability. I believe that backtesting is a great way to pressure test strategies and see how you as a trader perform with them in a practice mode before you tackle them in the live markets. If this video helped you along your trading journey, then subscribe. And if you'd like to see another trade exercise just like this, then check out this video right here. Every trade teaches me something a little bit different, and this next one might help you see something you never noticed before in the charts. I'll see you there.